So right before the briefing, we talked about the record day on Wall Street, the Dow hitting 25,000 for the first time today. Joining me now, Money Map Press Chief Investment Strategist Keith Fitz-Gerald. Hey, Keith.
Howdy, howdy, howdy. Good to be here.
Yeah, you know, we know what this rally has been. It's been on fire for over a year. It's about tax cuts. It's about repatriation. It's about corporate earnings. It's about jobs. Big question, of course, can this last into 2018 as we get another record today?
You know, I've been doing a lot of thinking about that for obvious reasons. I'm a big fan of sticking what works. There was a lot of money attracted because corporate earnings were going up. There's a lot of money attracted because jobs are good. There's a lot of money attracted because tax reform is there. Now, don't forget the president ran on a few other things. Immigration reform. He ran on the $1 trillion infrastructure plan. There's a lot of money that still has yet to come in. So if you stick with what works, you stick with the big techs, you stick with the defense stocks, you stick with the medicine, quality attracts money, and I believe that that's going to continue in 2018.
You know, one of the things about the economy that's been nice to see is unemployment. We're now at 4.1%. You know, we've got the jobs report tomorrow. ADP coming in, very strong, way better than expected. Do you think that jobs report tomorrow could take us on another rip-roaring rally?
I am cautiously optimistic. You know, numbers are really hard to calculate. You know, they can be adjusted. Everybody's been to that class in high school, how to lie with statistics, you know, so you can make bones about that if you want. But the reality is when you get below the numbers and you look at the corporate earnings, you look at the CEOs, you look at what they're achieving, all of those things are going up. That, to me, builds higher stock prices in the months ahead.
All right. Also, you know what, we're in the middle of this big storm right now. Obviously, the East Coast is. And one of the side effects like this, you know, obviously you want people to be safe. You don't want to have loss of life. But there's also an economic effect to all of this, whether it's the airports that have been shut down or the ports, which are, of course, in jeopardy right now. Do you, with this type of storm, do you think there's a short-term effect on the markets?
I think there's a short-term effect. It's going to come in an area that most people don't think about. It's going to come in natural gas prices, which ultimately are going to translate to the ratepayers, particularly in New England. It's going to come in the form of higher port costs because there's going to be additional labor once the storm stops and they have to clear it out. And finally, it's going to hit the electric grid because there's going to be power demands that are placed on it that are not being thought about right now. And finally, online shopping is probably going to take a pretty good bump because people simply can't get out the door.
And Keith, really quick, you mentioned that gas, but I wanted to ask you about oil as well. I mean, you're wondering if this could maybe be the reverse trend that we're seeing for oil for 2018.
You know, I think it's too early to call on that one. There's a lot of geopolitical events that play into that. I think supply is generally good. I think OPEC is trying to figure it out. They're realizing that the war they started with the U.S. frackers backfired on them. And at the same time, you've got alternative energy technology that is really starting to come into its own. So I think 2018 is going to be a confusing year for oil. I don't expect prices to move one way or the other by a huge amount.
Instead of saying volatile, you say confusing. I like that. That's a good way to characterize that contract. Yeah, it's gonna be fun to watch that and Bitcoin. Those are both confusing to me. Keith, thank you very much.
Exactly.
Good to have you on.